Alright guys, welcome back to day 3 of my trading study arc. Yesterday we talked about trend lines. So today I'm gonna get in a bit deeper and show you how to draw trend lines. Plus we are going to dive into some very important indicators such as RSI, Stoch RSI, and a bonus called divergences. So by the end of this video, you'll not only know how to draw cleaner trend lines, but also how to read the RSI indicator properly, how to spot divergences, and as a bonus, I'll show you the fear and greed index, which tells us the overall sentiment of the market right now. So grab a notebook, take some notes because this one is packed with value. Let's start with trend lines. Now, a lot of gurus online and all these influencer traders will tell you to draw trend lines only using the bodies of the candles and just ignore the wicks, right? Honestly, I don't do that. Okay, I personally do not do that. I always consider the wicks. Like wicks matter. For me, wicks matter. Why? Because wicks show you where the price actually reacted, and if you ignore them, you are missing the true highs and the true lows. So when I draw a trend line, I zoom in, make sure I'm connecting the wicks precisely. It takes more time, I know it takes more time, but trust me, like later on when you are actually in a trade, you'll see why, like how much more accurate it becomes. And let me show you a few examples right here on the chart. As I told you guys earlier, I will show you some real-time examples in this coin called BTC, how to draw trend lines. So basically, I mean, at first when you look at it, you actually can't get anything out of it. But let me draw some trend lines, like I told you how I draw trend lines. And I mean, by the looks of it, we can see that it has respected a trend line somewhere over here, like there's some resistance over here. So let's get this top of the wick and get this top of the wick as well. So we'll extend it a bit so we can really see the resistance level, and then we'll extend this as well, and then we'll go for the support. As we can see, as you guys can see, actually there's some support somewhere over here because there's two lows somewhere over here. Okay, so when you look at it, if you actually saw the yesterday's video, I explained about the chart patterns, right? So when you look at the chart patterns, there it seems to be a bullish flag pattern. Okay, there's the this works as a flag, isn't it? There you go, that's the flag pattern. So if it breaks over here and if it holds above this trend line, it's gonna definitely go up. Okay, and then I'll show you the same example in another coin, and it's called Ethereum, which actually respected the trend lines. And by the looks of it, it does not, I mean, I'm pretty sure you guys do not understand what it's doing. When we draw the trend lines from this top using this top as well, you have to extend it, and then there you go, this is the support, this is the resistance, and when you look at it, there you go, it's a bullish flag pattern, just like the previous one. There you go. So basically it came up somewhere over here, It basically respected the resistance and it just went up. And then, as the last example, I will show you guys a live trade. This coin is called XRP, and as you guys can see, there is a clear level of resistance somewhere over here and a support in this level. We'll go for this top and use this top. And we'll draw the support levels as well. There you go. As you guys can see, it's another bullish flag pattern, continuation pattern. If this breaks this trend line and it respects it, it's definitely gonna go way higher. So I hope you guys got it, how to draw a trend line properly, and I hope that you guys practice this on your own time. Like, practice makes it way better, and it you get actually used to retail trading. Did you guys notice how price reacted the trend lines? Like, it respected the trend lines way more compared to just using the candles to draw trend lines, right? Just using candle bodies. Yeah, that's why stick to this method, because it works. It works because it's actually precise, and it, like I said, it works. All right, so now let's move on to the RSI indicator. Basically, RSI means relative strength index. RSI is one of the most popular indicators, because it's simple. It's simple. What it does is measures the speed and change of the price movement. In simple words, it tells you if something is overbought or oversold. The Let's get into it. I'll show you how to identify the overbought and the oversold prices. Now, how you read it: if RSI goes above 70, it means the coin is overbought, which basically the buyers push too hard, and usually the signals a potential pullback or a reversal. So when it's overbought, a lot of traders tend to get into selling positions. Okay, and if the RSI is below 30, which means it's been oversold, that means the sellers dominated too much and it could be a good buying opportunity. Okay, so that's when you actually go for a solid long. Anything in between 30 and 70, that's like a neutral zone. If you are actually depending on just the RSI indicator for entries, most traders do not get into any trades between those two levels, because it's a bit dangerous. And there you go. This is the BTC chart. Like I said, it's extremely easy to get the RSI indicator here. Just go to the indicators option and type relative strength index. There you go. This is the RSI indicator. And as you guys can see, like I mentioned before, these two are optimal levels. These are the 70 marker and a 30 marker. When it goes above this 70 marker, the coin has been overbought, and when it goes below the 30 marker, the coin has been oversold. Let's go to the weekly time frame so it's easier. So as you guys can see, uh, right here, the coin has been overbought, and right after that the coin went down, right? That's what it means by being overbought. After it's been overbought, eventually the coin will actually go down, And then let me show you an example of the coin being oversold. There you go. Right here, the coin has been oversold, and then eventually the coin actually went up. So yeah, those two are the actual examples in a live chart. Now RSI also has a hidden gem in it, divergences. We'll get into it in a bit. So next up is another indicator called Stoch RSI, or stochastic RSI. This one is similar to RSI but a little more sensitive. Instead of just showing overbought or oversold, it just gives us an optimal buying point and a selling point. So basically, the overall idea of the Stoch RSI is there are two lines. Okay, there are two lines. One is blue, one is orange. Um, it gives the optimal buying point when the blue line goes up and the orange line goes down, and it gives the optimal selling point when the orange line goes up and the blue line goes down. I think it's better if I show you guys in the actual charts. Then it's easier for you guys to understand. And just like before, I will show you guys an example of the indicator Stoch RSI in the same coin BTC. Just like before, you have to go to indicators and then type stochastic RSI. There you go, I've pinned it. And this is the indicator. And like I mentioned before, there are optimal buying points and there are optimal selling points. When right here, as you guys can see, the orange line is above the blue line. And I told you guys earlier about the optimal buying points and the optimal selling points. When the orange line comes on top and the blue line goes down, it's an optimal selling point. So right here, this is a good selling point, and right here, this is a good selling point. Yeah, and right here, this is a good selling point. We'll go to the actual charts and we'll see what has happened in the market in these points. Right above here, the market has actually gone down a bit in it. Right here, I mean, this is we are in the weekly time frame. So this small candle, it has gone down a lot in the hourly chart. So right here, it has gone down, and even right here, it has gone down, and there you go. Even right here, it has gone down. So these are good entry levels if you are actually looking for a short entry. And let me give you guys an example for the optimal buying point. So the optimal buying points are right over here. We'll get rid of these markers for now. This is an optimal buying point. And just like before, I told you guys an optimal buying point is when the blue line goes on top and the orange line goes down. So there you go, the blue line is on top and the orange line is down. And then this is a good optimal buying point. And let's go to the actual chart to see what has happened in the chart. There you go. So this is the point, and when you look at it, it has actually gone up, and even here it has gone up. So yeah, those are some examples. Now here's something interesting. If you compare the RSI indicator and the stock RSI indicator on the weekly time frame, you'll notice that they don't always agree, because the RSI gives you lesser entry points, and those are extremely strong. But the stock RSI will give you many entry points, many signals, but not all of them are accurate. And I'll show you an example. Let's get the two indicators together. And as I told you guys before, even though here it says the coin has been overbought, there's only one entry point over here saying that you should sell from here. But when you look at the stock RSI, there are two optimal selling points. That's why I told you guys earlier, you cannot compare these two, because there are many entry points here, but there's only few entry points here. That does not mean that this is accurate or this is accurate. These two give different kind of signals. You need to actually spend a bit more time with these indicators in order for you to master these. So it's about finding the balance and understanding what each one is telling you. So you need to master those two indicators in order for you to like actually get an idea and get into a solid setup and get into a solid entry. Okay, so I've taught you some important indicators. So now let's talk about something powerful: divergences. There are two main types of divergences. Number one, regular divergences, and the number two is irregular divergences. Today I'll only cover regular divergences, because I don't want to overload you. I'll save irregulars for tomorrow. So now regular divergences are basically when the price is moving in one direction, but the RSI is showing that it's moving on the opposite direction. There are two subcategories in regular divergences as well. Number one being bullish divergences, and the number two would be bearish divergences. Uh, RSI, basically all these happens in RSI, because I've basically learned every single thing about divergences in RSI, so it's easier for me to show you guys the same thing in RSI. And bullish divergences, this happens when price is making lower lows, but the RSI is making higher lows. That usually means momentum is shifting upwards. And when you are talking about bearish divergences, this happens when the price is making high highs, but the RSI is making lower lows. Sorry, lower highs. Sorry. That usually means momentum is weakening and a reversal could happen. So let me sketch it out so it's easier for you guys to understand it. So as I mentioned before, I have drawn a small sketch in order for you guys to understand. Um, so this is a bearish divergence when these are the candles and this is the indicator. So when the candles are actually going in an uptrend, even though it is making higher highs, the indicator shows, basically the RSI in this case is showing that it's making lower lows. That means the market is bearish. So eventually, even though the market is going up, the indicator shows that the market is going down. So the basic idea of it is the overall the market is going to go for a dip. It's going to be bearish in the future. And then when we look at the bullish divergences, the market is making lower lows. The candles are actually showing that it's making lower lows, but the indicator shows that it's making higher lows. And that means eventually the market will respect the indicator's movement. It will eventually become bullish. So this indicator's um, path in a regular divergence, basically the indicator gives a slight idea of the future of the market. Okay, so I'll explain it further in a live market. Okay, so as an example for the bearish divergence, I will give you an idea of a bearish movement in a coin called dot. So as you guys can see, this in this area and in this area you could see an imbalance, and by the looks of it, it has actually made higher highs. But when you look at the RSI, it has not made any higher highs. As you guys can see, when you zoom in, it's not a higher high. So that indicates in the future the market's gonna go bearish. And just like that, the market respected it and it went down. And for an example about the bullish divergences, we'll look at the coin called Solana. And as you guys can see, these 2 points have been oversold. And even though it's making higher lows in the market, it's making lower lows. Let me show you guys. I hope that you guys can actually see the difference. This is making lower lows and this is not. This is making higher lows. So because of that, it respected the RSI's movement. It went up. Just like that. And remember, you can always spot divergences in other indicators such as Stoch RSI, MACD, not RSI. Like I told you guys, I'm used to RSI, so that's why I chose RSI, so it's easy for me to teach you guys what I know. All right, so let's finish today with a bonus, the Fear and Greed Index. This is a website that takes market data, emotions, and sentiment from different sources and crunches them into a single number, not a single number, a two-digit number from between 0 to 100. If the number is below 50, in the red zone, which is considered as the fear zone, it means the market is undervalued and it could be a good time to buy, like load up other coins maybe. And if the number is above 50 and in the green zone, which is considered as the greed zone, it means the market is overheated and it could be the best time for you to get out of the market and like to sell every single thing you have. And there is a neutral level as well. So when it's neutral, everything is calm. And right now, when you look at that fear and greed index, the index is right now is sitting at 33. That's in the, I mean, fear zone, the red zone, which tells me that there might be a good opportunity to load up some more coins if you are actually getting into spot. uh, because historically fear often comes before pumps. Just keep that in mind. And let me show you the actual site. So like I said before, this is the feed and greed index, and this is the site. Right now it's sitting at 33 in the fear zone. So it's, like I said before, we could actually hope for a pump in the future, and we could actually, if you're doing for, like, if you're going for spot trading, we could load up some more coins. So let's recap day 3. We learned how to draw trend lines using the wicks instead of the bodies, and we broke down the RSI indicator, what overbought means and what oversold means, and how to avoid the middle trap. We looked at stock RSI, which gives you more frequent buys and sell signals, which you have to be extremely careful of. And we introduced regular divergences, both bullish and bearish. So that's good, with examples. And finally, we checked out the fear and greed index, which gives us a sentiment read on the entire market. Tomorrow, I'll go deeper into irregular divergences. So make sure to subscribe, follow, like, because we are building this knowledge step by step. So you guys are actually helping me go ahead with this study arc. So remember, trading isn't about rushing. So you have to give it some time. It's about patience, practice, and consistency. So yeah, I hope you guys are good. I'll see you guys tomorrow in day 4.